What if I told you that before the end of this year, millions of Americans could see extra money quietly added to their Social Security checks without filing a single form? And here's the part that matters most. Many people still don't even realize they qualify, which means they could miss understanding what's coming and how it affects their monthly income. In today's video, we're going to break down exactly what's changing with Social Security, SSI, and retirement benefits in simple, clear terms. You'll learn who qualifies, how much more you could receive, when payments will arrive, and most importantly, what you need to watch out for so you don't lose money by mistake. If you rely on Social Security, even a small change can make a real difference. So, let's go step by step. Let's start with the biggest update, the cost of living adjustment, often called COLA. This is the annual increase designed to help your benefits keep up with inflation, or, in simple terms, rising prices. Over the past few years, many seniors have felt that prices at the grocery store, gas pump, and pharmacy have gone up much faster than their monthly checks. This year, something important has shifted. The adjustment is more meaningful than some previous years. For the average retiree receiving around $1,920 per month, that increase comes out to roughly an extra $40 to $50 each month. Now, that may not sound like a lot at first, but over a full year, that adds up to more than $500. And for couples, where both individuals receive benefits, that could mean close to $1,000 in additional income over the year. For those receiving higher benefits, the increase can be even more noticeable, sometimes over $100 more each month. Now here's something critical to understand. This increase is automatic. You don't need to apply, you don't need to call, and you don't need to fill out any paperwork. The Social Security Administration, or SSA, calculates everything for you. But just because it's automatic does not mean you should ignore it. You should still check your updated benefit amount, because errors, while rare, can happen. And if you don't catch them early, they can take months to fix. Now let's talk about timing, because this is where many people get confused. The increase does not show up immediately after it's announced. Instead, it usually begins appearing in payments, starting in January, though some people may notice changes as early as late December, depending on how their payment schedule is set. If you receive your check on the 3rd of the month, you'll likely see the increase right away in January. If your payment is based on your birth date, you'll see it on your scheduled Wednesday in January. And this timing is not random. It comes right after the holidays, when many households are dealing with higher expenses, credit card balances, and winter utility bills. That extra money, even if it's modest, can provide some breathing room. Now here's the part many people overlook: Medicare. Every year, seniors worry that even if Social Security increases, Medicare premiums might rise even faster and cancel out the benefit. And in some past years, that's exactly what happened. But this time, the increase in Medicare Part B premiums is relatively small, around $14 per month. That means, for most people, the increase in Social Security will still leave you with more money in your pocket after Medicare is deducted. This is important, because what matters is not just your benefit amount, but your take-home amount, what actually lands in your bank account. Now let's shift to something that affects a different group: those who are still working while receiving Social Security. If you have not yet reached full retirement age, there is a limit to how much you can earn before your benefits are reduced. For the upcoming year, that limit is increasing to about $23,400. Here's how it works in simple terms. If you earn more than that amount, Social Security will temporarily reduce your benefits. Specifically, for every $2 you earn above the limit, $1 is withheld. But here's the good news. That higher limit means more flexibility. You can earn more money, without triggering those reductions as quickly. And in the year you reach full retirement age, the rules become even more favorable. The limit jumps significantly, and once you officially reach full retirement age, the limit disappears entirely. You can earn as much as you want, without any reduction to your Social Security benefits. Now, let's pause here for an important reminder. This directly affects your monthly income. If you're working, and you don't understand these limits, you could see your checks reduced unexpectedly. Next, let's talk about SSI, Supplemental Security Income. This program supports some of the most financially vulnerable individuals, including seniors with very limited income. This year, SSI payments are also increasing. The maximum federal benefit for individuals is rising to around $967 per month, and for couples, about $1,450. Again, these increases happen automatically. But here's the warning you need to hear. SSI has strict resource limits. For individuals, you cannot have more than $2,000 in countable assets. For couples, it's $3,000. And here's the problem. These limits have not increased with inflation, so even small savings or unexpected deposits could push someone over the limit. If that happens, you could lose your SSI eligibility entirely. That's why it's so important to understand what counts as a resource and what does not. Your primary home, one vehicle, and basic personal belongings are usually excluded. But cash, bank accounts, and certain other assets are counted. If you're close to the limit, this is something you cannot ignore. Now let's talk about people who receive both Social Security and SSI, what's known as concurrent benefits. In this case, Social Security is paid first, and then SSI fills in the gap to bring your total income up to the SSI level. With both programs increasing, your total monthly income should go up as well. But the calculation can be complicated. And here's another important reminder. If the numbers don't look right, if your increase seems smaller than expected, you should contact the SSA. Mistakes can happen, and the sooner you address them, the faster they can be corrected. Now, let's address something that creates a lot of anxiety: the future of Social Security itself. You've probably heard headlines saying the system is running out of money, and it's understandable to feel concerned. But here's the reality. Social Security is not expected to disappear. Even if the trust fund reserves are reduced in the future, payroll taxes will continue to fund a large portion of benefits. Some projections suggest that without changes, benefits could be reduced to around 75 to 80% in the long term. That's not ideal, but it's very different from benefits stopping altogether. And historically, whenever the system has faced challenges, lawmakers have stepped in to make adjustments. Still, this is why staying informed matters, because policy changes, even small ones, can affect your long-term financial security. Now let's talk about something practical, what you should do right now. First, if you don't already have one, create a My Social Security account online. This allows you to see your payment history, your benefit amount, and your earnings record. And that earnings record is extremely important. Social Security benefits are based on your highest 35 years of earnings. If there are errors, missing years, or incorrect amounts, your benefit could be lower than it should be. Second, check your direct deposit information. Most people receive payments electronically. If your bank account has changed, update it immediately to avoid delays. Third, review your Medicare coverage during open enrollment. Healthcare costs can take a big portion of your monthly income. Choosing the right plan can save you hundreds, sometimes thousands, each year. Now, there's one more group we need to talk about: widows and widowers. If you've lost a spouse, you may be eligible for survivor benefits based on their work record. And in some cases, you can switch between your own benefit and your survivor benefit, depending on which is higher at different times. This strategy, when used correctly, can significantly increase your lifetime income. But many people don't realize they have this option and end up leaving money on the table. So if this applies to you, it's worth taking a closer look, or even speaking with a Social Security representative. As we move toward the new year, all of these changes come together in one important way. They affect your monthly budget. For many seniors, Social Security is not just part of their income, it is their main income, and even a small increase, $40, $50, or $100, can make a real difference. It can help cover rising grocery costs, pay for medications, or simply reduce financial stress. But the key is understanding what's happening, so you can plan ahead, avoid mistakes, and make the most of what you're entitled to. Because the truth is, many people miss out, not because they don't qualify, but because they don't have the right information. So here's the bottom line. Social Security benefits are increasing, payments are adjusting, and for most people, that means a little more money each month. Medicare costs are rising, but not enough to cancel out the increase. SSI payments are also going up, but strict rules still apply. And for those working or planning retirement, the decisions you make now can affect your income for years to come. Take a moment, check your account, review your benefits, and stay informed. And if you found this helpful, consider subscribing to the channel so you don't miss future updates that could directly impact your Social Security, your benefits, and your financial peace of mind.